drop whatever trivial nonsense you are currently doing. I don't care if you're stuck in morning rush hour traffic, rage, breaking in frustration. I don't care if you're pretending to be busy in a cubicle, and I don't care if you're staring at a flashing screen with a dry mouth. I need you to focus. Immediately right now. Holding nothing back, on every single word I am about to say, because the point in time we are standing on right now. This is absolutely not a normal day. What we are witnessing isn't just market volatility, it is a fracture in history. I'm not talking about the kind of history printed in yellowed, brittle textbooks. I'm not talking about the kind of case studies economists will analyze with hindsight bias decades from now. I am talking about right here, right now, right in front of your eyes. Living, breathing history, dripping with desire, greed, and fear. The movement in the silver market has reached the edge of losing control. It has become too big for any rational investor to pretend they don't see it. This is no longer the familiar gentle bull market. That 2 steps forward, 1 step back greenhouse environment that gave you plenty of time to think, that is over. This move, it's a riot. It is a vertical strike. In the physical sense, its speed is suffocating. It is catching people off guard. It is fast enough to make veteran traders, people with 10, maybe 20 years of experience who think they've seen every storm, feel dizzy and physically nauseous. Just in this recent window, we are talking about a mere 48 to 72 hours. You might have permanently missed the price levels that everyone else was still debating, hesitating over, and calculating support for. We are watching silver not just rise, but teleport. It's like a beast that has broken free from gravity, screaming straight toward the $90 mark, a critical historic level that forces the entire global financial market to stop, wipe its eyes, and redefine what a normal price is. Yes, do not doubt your eyes, and do not suspect a glitch in the quote system. What we are discussing right now is silver beginning its wild performance in the high altitude of $90 per ounce. In just these past 2 days, silver went from the $80s, which we hadn't even fully adapted to yet, and surged straight to $90 in one breath. This speed is so fast that even old silver bugs who have tracked this for years are constantly refreshing their terminals, rubbing their eyes to make sure they aren't hallucinating. But you have to understand the significance of this speed, this extreme velocity, in terms of trading psychology. Extreme market moves aren't just changing numbers, they change hearts and minds. They instantly pierce through psychological defenses. And once the human mind changes, in a market made of human emotion and capital, all logic changes. Now, I'm going to tell you a gut-wrenching, naked truth. When silver starts a performance of this epic scale, the average investor in front of the screen, maybe you, usually has only 2 extremely primitive physiological reactions. Reaction number 1. You are completely terrified. You watch the price shoot up like a rocket. Your brain goes blank. You freeze up, afraid to move, completely losing the ability to act, watching the wealth train scream past you. Reaction number 2. Your adrenaline spikes. In a rush of hot blood, you chase the high without thinking, terrified of being left behind by this era, before you even figure out what is happening. Right at this moment, right at this $90 threshold, the winners and the losers are starting to diverge violently. Because in this brutal market, the people who really make money are never the ones shouting slogans the loudest during the rally, nor the ones posting their trade slips most frequently on social media. The real winners are those who remain extremely calm amidst the noise, who truly understand the underlying logic driving this move, who know what core elements will support it through the inevitable correction, and who know what micro signals will hint at a pause or a washout. This is far more than just silver going up in price. If you only see the price change, you are only seeing the tip of the iceberg. This is a complex chain reaction. It is the iron fist of macro policy, the game of geopolitics, the extreme release of supply pressure, the deep fracture of market structure, combined with a mining sector that hasn't realized what hit it yet, all churning together in the specific time node of 2026. Pay attention, hasn't realized what hit it yet. These 6 words are the wealth code you need to circle with a red pen. Let's talk about the move itself first. Why now? Why 2026? Once silver accelerates, it is never gentle. Historically, silver has this nasty temper. It can sit at a price level like a rock for a long time, long enough to make you doubt your life choices, feeling like holding it is a waste of life. Then, suddenly, it delivers a volcanic eruption, slapping the faces of everyone who said, impossible, and everyone who was short. So when you see silver rage from roughly $50 all the way to near $90 today, this isn't just a breakout on a chart. This isn't just overbought technical indicators. This is the market repricing the metal, not just trading it. Once the market begins a repricing event, it usually doesn't end in a week or even a quarter. This is why you are now hearing even the most conservative Wall Street analysts shouting aggressive targets, like seeing $130 or even $140 by next year. Can I responsibly tell you exactly where the top is? Honestly, no one can. But in my experience, when these massive price targets start appearing after a breakout, it usually means we are leaving the old world and entering the most savage, the most crazy, but also the most profitable part of the cycle. Up there, massive volatility, the terrifying kind that swings 10% up or down in a single day, is the ticket price you must pay to enter. If you can't afford that psychological cost, you are not qualified to enjoy the feast that follows. The next part is critical, because it explains the root of this move. This rally didn't appear out of thin air. It has real, tangible drivers. It's not rumors. It's not internet memes. And it's not just retail hype on Reddit. Supply has been controlled. At the beginning of this year, China implemented additional, strict control measures on silver exports. The new regulations are clear. Only specific, state-approved entities can engage in export business. Everyone, please stop what you are doing, even for a minute, and think about what this means. I know someone will say, oh, but not all silver is mined in China. The Americas are the main production region. Even if the raw silver ore isn't mined in China, massive amounts of global metal concentrates need to be shipped to China to go through that massive, efficient, and irreplaceable refining, processing, and logistics system. China is the heart and hub of the global metal supply chain. So, when this policy came out, it didn't just affect China's domestic silver. It didn't just slow down shipments. It created massive friction across the entire global supply chain. Friction, that's a nice neutral word economists like to use. In reality, translate that into plain English we can understand. And it means delays, jams, long waits for quota approvals. It means when you urgently need physical silver to produce solar panels or manufacture electronic components, the ounces you receive are fewer than expected, or the delivery date is pushed back 3 months. In a market already extremely tight due to surging demand, throwing a handful of sand into these precision gears, adding this artificial friction, is like pouring a bucket of gasoline directly onto a dry haystack and dropping a match. Moreover, this move signals something deeper and more strategic. Governments, especially major powers, have begun to deeply realize the strategic value of metals. They did it with rare earths. They did it with other key battery metals. And now, the visible hand has finally reached for the precious metal that is simultaneously money and a heavy industrial necessity, silver. Because silver isn't just pretty. It's not just for jewelry. It is genuinely useful. It is the most conductive metal. It is used in high-end electronics, in photovoltaic energy systems, in military industrial applications. These are key areas of national competition. So, when policy tools like export controls appear, it's not just a simple economic decision, it is a geopolitical lever. This brings us to the next layer of logic, geopolitics, and the macro-monetary environment. In early 2026, we have already seen massive turbulence globally. I don't need to go into the details of specific conflicts. You watch the news, you know. But regardless of your view on the headlines, the financial market is cold-blooded. It only cares about one word: uncertainty. Uncertainty drives the most primal human need for safety. Safe haven demand drives capital into safe assets, and capital flows drive price. So the question is, how much of this silver rally to $90 is safe, haven demand, and how much is supply, demand fundamentals? Honestly, it's both. They are reinforcing each other, but the bigger engine, the one that usually runs longer and more persistently than any single geopolitical crisis, is the thing most people choose to ignore, because they find it boring: debt, money creation, currency dilution. If you want to truly understand why gold and silver always trend up over long cycles, stop staring at the daily news, go look at the charts of money supply for major global economies over the last few decades. especially since 2020. That is not a straight line, my friends. That is a jaw-dropping exponential curve. That curve tells you the inevitable fate of paper money over time. Expansion, then death. When the speed of money expansion exceeds the speed of physical goods production, the purchasing power of every unit of currency inevitably drops, and metals, specifically gold and silver, act as the honest scorecard for the global financial system. When you see silver rise to $90, it's not that silver changed. An ounce of silver is still an ounce of silver. Its atomic structure hasn't changed. What changed is that the dollars, euros, and yen used to measure it became weaker, became watered down. Now, on top of this flood of currency, add geopolitical pressure, add supply, side controls. This isn't just adding fuel to the fire, this is borrowing a hurricane to fan a forest fire that is already burning. So yes, wars, tensions, and uncertainty are important. But even if world peace breaks out tomorrow, even if the headlines are quiet for a month, the printing presses of central banks won't stop. The snowballing of debt interest won't stop. This is why many Wall Street heavyweights feel this time is different for silver. This isn't just a speculative spike. This is the market being forced to admit that the old price levels were a lie, an old dream that no longer holds true. If that judgment about the $90 new normal is correct, then right now, the brain of every investor watching this screen must be screaming the same question. A question keeping countless people tossing and turning at night. Damn it, silver has gone up like this. So why haven't the mining stocks in my hand skyrocketed? Why is the metal beating the companies that dig the metal? Did I buy fake stocks? I understand this confusion. The anxiety of watching the spot price sprint while your account sits motionless is enough to drive you crazy. But this is exactly the final narrow gate the market leaves for you. It is the ultimate testing ground to distinguish the prey from the hunters. Listen to me, this divergence is actually a gift from God. Because when mining companies lag during a rapid rise in metal prices, it usually means the entire stock sector hasn't fully digested this new reality. The market is efficient, but in extreme conditions it is slow, it is panicked, and it is confused. You need to understand the food chain of transmission. In the mining sector, Wone Capital always attacks the most liquid assets first, spot and futures. 2. On spot stabilizes. Capital flows to the major producers with massive cash flow. 3. Next are the mid-tier producers. 4. Then the developers with quality assets. 5. Last are the explorers telling stories. This order is set in stone, and right now we are in the eve of the switch from stage 1 to stages 2 and 3. This isn't just a lag, this is potential energy building up. When quarterly reports are released, when those real profit figures, dripping with the smell of blood, are slapped onto the table, you will see an epic storm of catch up. The most dangerous assumption is thinking miners will never react. They will react. And once they start, they will correct this valuation gap with a violence you cannot imagine. Why am I so certain miners will catch up? Because math doesn't lie. There is a core concept Wall Street doesn't want you to understand too well, called operating leverage. This is the sexiest, most brutal, and most fascinating part of mining investment. Every extra dollar the metal price rises isn't just an extra dollar of revenue for the miner. Let's magnify the numbers. Let's do a math problem a grade schooler can understand. Let's assume a producer. Last quarter, when silver was $40, their all-in sustaining cost was about $15. Now silver has skyrocketed to $90. Even if we account for inflation, let's assume costs rose to $60 open. Your eyes and look at this change. Silver price went from 40 to 90. That's a 125% increase. But the company's net profit per ounce went from 15 to 60. That is a 300% increase. This is leverage. And it doesn't end there. When profit quadruples, the P/E ratio of that company is instantly crushed to the floor. A stock that was 20 times PE suddenly becomes 5 times PE. That is when the quant funds, the pension funds, the big institutions that were too scared to enter because it looked expensive, will smell blood like sharks in frenzy to buy in. This is why the next few reporting cycles are so critical. You might be witnessing the setup for a super revaluation. Those stocks that look dead right now are actually compressed springs. The harder you press them, the higher they explode. The logic is clear. Now we need to load the chamber and aim at a specific target. In an era paved with gold but also full of traps, what kind of asset can carry this 100-fold expectation? I'm going to give you a specific combat ready case study. No personality cults. Don't guess who I am. We only look at the asset, only the logic. Turn your eyes to Mexico. This land is the Jerusalem of silver. From the era of Spanish galleons, this has been the heart of global silver. It has geological talent, it has mining DNA, and on this legendary land, deep in the winding Sierra Madre Mountains, lies a company with extreme ambition. This company isn't a shell company holding a map and spinning stories to scam money. What they hold is a genuine royal flush. They have built a massive project pipeline. Note my words, pipeline, not single mine. They possess 4 distinct mineral deposit discoveries. Why is this important? Because a single mine has risk. If it collapses, if the grade cuts out, the company is finished. But owning 4 independent deposits means they have error tolerance. They have an engine for continuous growth. Among these 4 deposits, there is a flagship discovery. The grade is extremely high, the location is prime. According to their latest technical report, the maiden resource for this project has already reached the level of approximately 54 million ounces. Evrione, at $90 silver. What does 54 million ounces mean? That is already billions of dollars in potential in ground value. But that is just the start. The management of this company is the embodiment of greed. In a good way, they are not satisfied. They are drilling frantically. Their public goal is to push this number toward the super threshold of nearly 100 million ounces. 100 million ounces. In the silver mining circle, this is a god-tier threshold. Once you cross this number, you graduate from a nobody to a world-class player. You become the prey that must be acquired by the giants. The next logic I'm going to explain is the watershed moment that separates professional investors from retail tourists. If you understand this, you grasp the holy grail of mining investment. This is the magic of real options. Remember I said this company has 4 deposits? In the years when silver was stuck at $25, apart from that highest grade flagship deposit, which could barely be counted as an asset, the other 3 secondary deposits were basically just piles of broken rocks on the financial statements. Why? Because the grade wasn't high enough. The cost of extraction couldn't cover the silver price back then. At that time, they were liabilities, burdens, dust valued at 0 by the market. But listen closely, when silver rises like a mad dog to $90, a miracle happens. It is a modern-day alchemy. Those 3 secondary deposits once viewed as waste rock. Their economic models are completely overturned overnight. Assume one deposit costs $35 to mine. At $25 silver, you lose $10 for every ton you dig. Anyone who digs is a fool, but at 55 per ton. This means the value growth of this company isn't linear addition. It is exponential multiplication. It doesn't need to find new mines, it just needs to sit there. Watch the silver price rise, and the resources in its hand automatically flip from waste to mineable reserves. This is the power of a pipeline. At low prices, you buy 1 mine. At high prices, you discover you actually bought 4. This embedded leverage is something no futures contract or ETF can offer. To verify this grand vision, to turn that 100 million ounce dream into reality, this company has launched a massive engineering feat. 50,000 meters of drilling. These 50,000 meters aren't just poking holes in the ground. Every meter drilled is a shot of adrenaline into the capital markets. They are doing 2 extremely critical things. 1. Step out drilling. The drill bit extends to the edges of the known zone and still hits high-grade mineralization. This proves the ore body is bigger than we imagined. The boundaries are expanding. 2. Deep testing. Geologists' biggest fear is the vein pinching out, getting thinner as you go down until it is gone. But the ore body here extends calmly into the depths, maintaining perfect thickness and grade. What does this mean? It means the mine life could be much longer than expected. Every time drill results are released, it eliminates uncertainty. The runway gets longer, the story gets sexier, and the Wall Street fund managers will swim over like sharks smelling blood. Attention brings liquidity. Liquidity brings high valuations. And what is the endgame of all this? Mergers and acquisitions. Don't be naive. Large mining giants hate exploring from scratch. It's too slow, too bitter, too risky. They prefer to be reapers. When this junior company proves the resource with 50,000 meters of drilling, calculates the economic model clear as day, and secures the environmental permits, it becomes a prepared feast. Those large producers sitting on cash but running out of underground reserves will stare dead-eyed at this kind of company, one with a complete pipeline, and that has been de-risked. At $90 silver, time is money. Buying it means buying 10 years of future growth. And at the negotiation table, the premium for this kind of pipeline asset will be staggering. Now, let's deal with a problem where countless smart people capsize in the gutter. This is also the question I get most often in my DMs recently. Since you say the silver bull market is so fierce, why do I see that famous silver miners ETF actually underperforming physical silver recently? Some days silver goes up and the ETF goes down. This isn't scientific. If you have this question, congratulations. You are making a typical linear thinking error. But in my eyes, this divergence isn't a danger signal. Quite the opposite. This is God winking at you. Listen to me, ETF underperforming spot usually means it is still early. You need to understand the physics of capital flow. In the early stages of a bull market explosion, especially a spike caused by geopolitics and supply shocks, money is panicked. It is impatient. Panic money wants the purest, most direct, most liquid exposure. That is the metal itself. It's brute force. It doesn't involve corporate governance. It doesn't involve political risk. It doesn't involve specific mining costs. So the first wave is always the metal flying first, and stocks. Stocks are complex. You have to study the balance sheet, worry about mine life, consider the policy risk of the country. This complexity naturally delays the entry of capital. But that is where the opportunity lies. When the metal price stands firm on the new step of $90, when the first wave of people who ate the spot gains are full and start looking for higher yield depressions, they will realize, my God, why are the valuations of these mining stocks still stuck at $40 silver? At that moment, capital rotation happens. Once it starts, it won't be a trickle. It will be the opening of the floodgates. Mining stocks will instantly turn from a forgotten corner into a money-printing machine. At that time, you will see mining stock gains are no longer just following the trend. They will leverage the metal's gains by 2 times, 3 times, or even 5 times. The weakness of the ETF right now is the best cover for you to build a position. Don't wait until the ETF has flown to the moon to go in and be the bag holder. You want to be the person ambushing before dawn, not the person chasing highs under the noon sun. Okay, the logic works. The target is selected, that Mexican company with 4 deposits and 54 ounces. The question now is, how long do we wait? In the world of silver mining, the market values companies like it values Hollywood movies. It relies on story and catalysts. I have made you a list of catalysts for 2026. This move doesn't require silver to go to $140 for you to make money. As long as this company executes these positives step by step, the stock price will climb on its own. 1. Continued drill results from the flagship. That 50,000-meter plan means every month, maybe every 2 weeks, the company will release an announcement. Every time the announcement mentions high-grade intercepts, extensions, or open at depth, it is a pulse stimulation to the stock price. This is organic growth, independent of silver price. 2. Official resource updates. The market loves clear milestones. Moving from the maiden tilde 54 million ounces toward a bigger number. Like approaching 100 million ounces, the moment the official technical report stamps that number, it is the coronation ceremony for the company graduating from little brother to big boss. The market eats these milestones up. 3. Trash to treasure economic assessment. This is what I value most. Turning those 3 secondary deposits from interesting to economically viable. When the company announces the start of a preliminary economic assessment, they are effectively telling the market, we are going to start doing the math using $90 silver. When that NPV net present value number pops out, it will become the hardest floor for the stock price for permitting and baseline progress, although boring, and no one likes reading environmental reports. Every stamp of approval means the project is 1 step closer to production or acquisition. This is de-risking. Professional institutions value this the most. 5. Hidden strategic interest. Watch the tape. If there is unexplained rising volume, or if the stock rises when silver dips, big players might be secretly accumulating. If a giant suddenly announces an equity stake in this company, even just 9.9%, that is a nuclear-grade endorsement. Before we charge, we must talk about risk. We must talk about Mexico. This issue comes up often and is important. Mexico is the Jerusalem of silver, but it is also a complex maze. There is bureaucratic red tape for permits, delicate community relations, and shifting political winds. This is why I constantly emphasize having an experienced local team isn't just a bonus point. It is a life or death moat. In this company, you don't just need geologists who can drill. You need old hands who have been deeply rooted in the area for years, who know how to drink tequila with the community, who know how to deal with government officials, and who know how to get things done without burning bridges. A company that has operated there for years, with a stable field team, disciplined methods, and a track record of discovery, has a completely different fate from those newcomers trying to rush in during a bull market, to learn from scratch. The former are the local heavyweights, the latter are the prey, the company we are looking at. Their team has roots in the Sierra Madre. This is why they secured those 4 deposits. This is why they can smoothly proceed with 50,000 meters of drilling. It is an invisible asset, but in times of crisis, it is more valuable than gold. If you are still with me, reading to this point, I want to give you one final, and most important, piece of psychological construction. $90 silver made the headlines, but this is just the beginning. The real wealth transfer usually happens in the messy middle. What is the messy middle? It is those months, long consolidations, those violent pullbacks that scare people away, those slow building arguments that reward patience. This is why I constantly warn you, silver will try to throw you off the train. It might crash $15 in a week, making you doubt the bull market is over. It might do a fake breakdown, smashing through key support, then V-shape reverse overnight. It might grind sideways for 2 months, making you feel bored, anxious, and impatient. And that is exactly when people make mistakes and hand over their chips. The trap is believing price only goes in one direction. But bull markets don't move in straight lines. They sprint, then rest, then sprint again. Silver loves to punish both sides. It punishes late buyers with sudden crashes and punishes early sellers with violent rebounds. The smarter move is to figure out what stage you are in. We are in the post-breakout reset phase. $90 isn't the top, it is the new floor. Just like in the early 2000s, silver went from $5 to $20, and then turned $20 into the new floor. We are witnessing $90 becoming the future bargain zone. Alright, this long sermon is finally coming to an end. To ensure you don't forget the moment you walk out of this room, I want to give you a simple summary that must be carved into your brain. Regarding this silver storm of 2026, please remember these 7 iron rules. No new regime established. Silver has broken free from the old gravitational pull and entered the new era of $90. Speed is critical. 2. Policy is the fuse. Supply chain friction caused by China's export controls is a long-term fundamental support, not short-term hype. 3. Currency is the fuel. Geopolitics can amplify safe haven behavior, but the bigger driver is long-term monetary expansion and debt dilution. As long as the printers run, silver won't stop. 4. Miners must catch up. Miners usually lag first, then violently catch up as earnings and cash flow become undeniable. The current divergence is an opportunity, not a risk. 5. Optionality is leverage. Secondary deposits that look marginal at low prices quickly become valuable as the base price shifts up. The multi-deposit strategy is King 6. Winner takes all. The best stories in this space are usually companies with pipelines, strong local teams, and disciplined execution. 7. Embrace volatility. Volatility is not a bug in silver, it is a feature. It is your entry ticket to excess returns. Every own. The gate is open. The storm has arrived. Do you choose to shiver in fear, continuing to search for scraps in the ruins of the old world? Or do you choose to embrace this baptism of wealth, holding tight to those core assets with pipelines, teams, drilling, and optionality, crossing this messy middle to reach the shores of fortune? The answer lies in your own hands. Now, I want to hear your voice. Really, I want to know what you think. Do you think silver will reach what level before it truly cools down? Is it stopping at 100, or will it rush toward that crazy 150? Do you think miners will catch up significantly this year, or do you feel the metal will continue to lead while stocks lag? Leave your answer in the comments section. I read every single comment. It helps me decide what to talk about next. Since you are there, if you've done well, if you've made gains in metals, mining stocks, or your investment journey, share your success. It inspires others, and shows that real progress is possible. Finally, I must add a serious disclaimer. I share information, logic, and analysis, but investment decisions should be based on your own research, risk tolerance, and financial situation. Before making any investment decisions, please consult a qualified financial advisor. Past performance does not indicate future results. Markets carry risk, including the risk of losing principal. Especially in high volatility sectors like mining and commodities, risks are particularly prominent. Do your homework, decide carefully, and be responsible for your own wealth. Good luck to everyone. See you at the top.